In this video, we will discuss Tesla stock, what happened today, the good, the bad, and, well, going from positive to negative on Tesla, what in the world happened? Okay, I explained this in the last video. We'll talk about it here in this video as well. We do have data coming out tomorrow morning that will be very, very important, and I want to share my perspectives with you on that, what Wall Street is expecting, and the range of potential outcomes that we could see for markets and for Tesla stock coming tomorrow based on that data. I actually want to start with this clip from Tom Lee. He issued a rare warning today that you really don't get too often from Tom Lee. So I want to make sure you guys hear this because he is very accurate with most of what he says, and I'm not gonna not show you this, is essentially my point. I think it really comes down to Friday though. Friday's going to give you a more definitive kind of playbook for September, which again, I don't necessarily agree exactly with Tom Lee and what he says because I think there is so much importance around Friday. But we'll talk about that after the clip. Here it is.
Joining us now with this call for the markets on the first trading day of September is Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month. But this week is the jobs report. I'm sure there's going to be a lot of focus on that. Right.
So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation. It's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong because, of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we know, I mean, we always make lows in October, or we have many, many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. You know, September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless, and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production.
More production.
Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realized the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds, no, this is a strong market.
How far down? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's it's been testing investors' patience. But I think, we should expect turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always? Or is there going to be and by the way, buy the dip at when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we do.
And are you waiting for that?
Yeah, I think it, you know what, we'll find out this jobs report, because like if it's too strong and investors worry and so the stock market's down Friday, I would be buying that dip, but there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I think, I just say at the bottom line is it's a strong market, so I don't think we've seen the top for 2024. It's just that the next 8 weeks are tougher.
As you heard there, Tom Lee is advising his clients over at FundStrat to wait for around a 5% pullback to even start buying the dip. Now, the problem with this is if we get that kind of a sell-off, a 5 or 10% sell-off, I don't think it's going to be contained there. And really what I mean by that is Friday's jobs report, if it comes in bad, then Wall Street's going to have to start pricing in some recession risk, okay? They're going to have to start pricing in a Fed that potentially waited too long to start reducing rates. And, I mean, we got a 10% correction in like 3 days, it feels like, in the S&P when you started to price in some recession risk. I think you could see something similar to that again if Friday's jobs report is bad. Now, as I talked about in the video last night, the data may be kind of leaked in a weird way already. There was a strange trade that was on the volatility index, the VIX, targeting between 22 and 30 for the VIX by the end of September. And boom, we wake up today, S&P's down 2%, VIX is up 30%. Coincidental timing? I don't know. Now that trade, as I showed in one of the last videos, has a max payoff of about $280 million. And that was just put on Friday. Okay, this trade here, it almost looks like something was leaked, if you will, and Wall Street kind of had a heads up on this. Now, that doesn't mean that, we have to go down or that it's guaranteed the data was leaked. Take everything with a grain of salt. But again, the problem is if Friday's jobs report is bad, it could get really bad. I think if the unemployment rate goes up another 0.2%, goes from 4.3% to 4.5% on Friday, when it's actually expected to fall to 4.2%, you probably will get a circuit breaker in markets. You'll probably get a 7, 8, 9% down day. I wouldn't be surprised if that happened, just based on, markets. They're not pricing in any recession risk. And at that point, like, we're hurtling into a recession. Now, is that the base case assumption? No, I actually think September's jobs report is going to be decent. But if you look at the historical precedents of the manufacturing PMIs to non-farms, the manufacturing PMIs tend to lead non-farms. So what I mean by this, and Bank of America had a great chart on this out today. If you go to the X account, you'll be able to find it. Go to Michael Tyler and click that follow button, and you'll be, able to see all of this research that I talk about in these videos each and every single day before they're actually put out in videos. But nonetheless, manufacturing ISM and non-farms tend to go hand in hand. So the manufacturing PMIs came in bad today. That's suggestive of a non-farm payrolls report that also will come in bad this Friday. And I think it's really down to the non-farms to decide how September goes. If September is a great month, it's going to be because the non-farms came in good and the unemployment rate actually fell. If September's a bad month, it's going to be because, well, unemployment rose and, job creation came in subpar and worse overall than markets were expecting. And as I said in the video that was put out Sunday night, I was expecting some downside for Tuesday, today, Wednesday, Thursday, heading into Friday, because on a risk to reward basis with markets this close to all-time highs and the real potential of a disappointment for Friday's jobs report, what's the risk to reward being long in our markets right now? It's terrible, right? There's a lot more risk to the downside than risk that you miss the upside at this point, at least in the very near term. Well, tomorrow morning we have JOLTS job openings, and that's going to decide really what happens to the markets tomorrow. And I think the JOLTS job openings is really more of an economic barometer more than a labor market barometer. Although you are, monitoring the amounts of job openings, I do think it gives you a glimpse of how strong the economy is more than anything. Because if this number comes in high, there's more jobs that need to be filled. That's great. The economy is doing just fine. If this comes in lower or plummets, then there could really be substantial weakening in the economy in real time and less jobs that need to be filled. And that would not be great. We're expecting this number is only going to fall about 80,000 for job openings tomorrow, from 8.18 million down to 8.1 million. So we're not expecting much of a move there. So I think that's why tomorrow could get a little bit more interesting, because if this thing falls to 300, 400, 500,000 jobs, yeah, markets are going to have another rough day tomorrow. If this comes in good or higher or along the lines of expectations, I think markets will like that, and you'll probably get a buy the dip reaction to some degree for tomorrow. I do think Thursday is probably going to be the day in which you get more downside heading into that Friday BLS report, but that's just my personal opinion. On Thursday, you will have initial jobless claims, the ADP employment change, and ISM services. So there's definitely going to be a lot of catalysts for Thursday's price action. And again, it wouldn't surprise me if that's a downward price action move for markets before that BLS report. Now, Tesla had some really good news today. Tesla had 14,400 vehicle insurance registrations out of China. Quarter over quarter, you're up 24%. Year over year, you're up around 11% over in China. So some great numbers coming out for China. And that did help prop Tesla stock up for a while. There was also news Friday in after hours, actually, or about 30 minutes towards the end of the day, that Tesla's just mapping or collecting, I guess not mapping, but collecting a lot of data on the roads around the Warner Bros. Studio. So we may not get just a, contained demonstration, but we may actually get the first robo-taxi ride from Tesla on October 10th. And that caused people to get excited about Tesla stock as well today. And that's why you did see the overall outperformance of Tesla even now, into the end of the day. But you did especially see that outperformance in the, first half of the day or so as well. What's also interesting about today is, yes, it was a bad day across the board, but the equal weight S&P did a lot better than the market cap weighted S&P. It did a lot better than the NASDAQ. The RSP was only down about 1.24% today, whereas the S&P was down about 2%, and the NASDAQ, as well as the Russell, were down about 3% apiece. And you did see some semblance of a rotation as well. Dollar General did pretty well. CVS did well. AbbVie did well. These are some stocks that I own in, totally separate industries from each other. And, there was some rotation out there. So it wasn't just a total risk off event, sell everything and panic. That's not how it felt today. Oh, they're trying to buy stuff here. But it was definitely a rough day. Big tech took it on the chin the most. Nvidia down 9% was definitely a really bad day. I think whether or not September ends up being a good month for Tesla and markets really comes down to this Friday. I wouldn't be surprised if we do bounce tomorrow on a, good JOLTS job openings number, a number that's in line with estimates. But then we probably do fall on Thursday because, there's a lot of risk heading into Friday. And you probably want to take some risk off the table if you're a fund manager heading into that event. Again, when the upside could be 1 or 2%, maybe 3% on a really good report, but the downside could be 5 to 10% on a really bad report. Like, just imagine for a minute the unemployment rate goes to like 4.7%, because what tends to happen is when you're going into a recession, when you start to get that labor market weakness, it goes slow at first and then it happens like all at once. So just imagine if the unemployment rate did surprisingly go up like 0.5% tomorrow or Friday. Just imagine that. It went to like 4.9%, 4.7% or so. You'd probably have a 10% down day. Like, just judging off of where markets are, where expectations are today, like, I would not be surprised if you had a 10% down day if you did see a big jump in unemployment. There's a lot of risk there. Too much risk, not enough upside to justify taking that risk. So to see some more risk off behaviors heading into Friday makes a lot of sense to me. So hit the like button as well as subscribe to the channel. Go risk on with that like button and subscription button as well as the notification bell, because why not? Go risk on in those areas. Go risk off maybe somewhere else in other areas. Maybe in the portfolio, huh? Can you say portfolio? Portfolio. See, I got fries in my mouth. I ain't saying nothing. See, he said nope. All right. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.